morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 3rd, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. I hope you all had a fantastic Labor Day holiday here in the U.S. Back at it with a new week of trading, a holiday-shortened week with NFP on Friday. Looking at the ES right now, you'll see a little bit lower here in overnight and pre-market trading. Dropping away from the previous month's highs here. You see now that we are on September's chart here, and we got new pivots for the month. The new pivots show that the previous month here, August, finished at the highs of the month. You have the previous high here, previous close there, previous month's midpoint here, and the previous month's low is right here, 51.20. And that's a wide spread. That's a very wide spread for the month. Typically speaking, when you have a wide spread like this and you finish at an extreme, you're looking for an initial reaction at that extreme. If there's a rejection here, it could lead to a snapback toward the midpoint down below. That midpoint is going to be right around 5,400. That's going to be something to watch for here early this week if we start to see initial rejection at this edge, which we're already seeing. But more importantly, we have a narrow multi-week range here that has continued to build energy. This is a 10 to 12 day range right here of compression. We're looking at significant expansion ahead once we do get a breakout from this range. And just to recap here, if we take a look at, let's make it 12 days right here on the PivotBoss Advanced ADR indicator. You apply it right there, and now you're going to get a reading right here that shows you exactly where we're at. Right there. That's your 12-day reading right now, and it's about 34% of average, so just over a third of average range at 133 points total. That's basically taking it from this low to today's high, basically. That's your range. Now, if we made it an 11-day range, it would be even more compressed than that. But the average would be about 350 points. The 125% extension, which is usually what you shoot for whenever you see an expansion phase from a compression phase, that's going to be 430 points. So anywhere between 350 and 430 points of range could be seen in the 10 to 12 days ahead once expansion occurs. Now, in terms of directional conviction, which way do we go? The short-term trend has been up. Perhaps we get an upside break. We are near the upper end of a larger range right now, so perhaps any failure of an upside break could swing things back down. We got to wait to see how this thing plays out. As of right now, from a near-term perspective, working lower within that range until proven otherwise. And as of right now, again, sitting at the lows of the session within a very narrow range. Intraday, bulls want to get back above 56.40 for a return back toward 56.55 to 56.60, but for the most part still inside the range, building energy from a swing perspective. If we take a look here at the NQ, you'll see right there the NQ has also developed a narrow range. This one's more downward trending, almost flagging in a way right here. You also see that this one has a wide spread for the previous month's range. That high is right here the previous month, the low is right here, and the midpoint is that level right there, which is about 18,740, and the close right here. So again, if we were to see any rejection of the high or close, you're snapping back to the middle of that range, and a failure at the midpoint opens up the previous month's low. That's the usual approach here for this market. After a wide spread, there can be more range-bound price action right there, especially as the market starts to await potential Fed rate cuts here later on this month. September 18th is Fed Watch Day, and then you also have, of course, Election Day coming up in early November, November 5th, so the market could go a little more quiet ahead of that date as well. So right now, compressed for the most part. Once we see expansion from this range, we could be looking at about 1,700 to 2,100 points of range. 1,700 would be an average move. 2,100 would be the 125% compression to expansion target. So if we fail here at 19.1, we could be looking at a drop that takes us all the way back to the lows if it were to drop 2,100 points. So again, major buildup of energy here. As of right now, showing a little bit of weakness. Intraday, bulls need above 19,520 to open up the 19.6 level on an intraday basis. Looking at crude oil, crude right now down about 1%. This market had a wild August. Lots of volatility in August, from the first trading day way up, then way down, then way up, down, up, and then down again to end the month. It was the most volatile month we had seen in a very long time, especially this year, where this year, relatively speaking, we had lots of chop compression on multiple occasions where it was a lot of sideways price action with rare bursts of movement. This was a ton of volatility, unlike anything we've seen in a while. We are now back to the 72.48 level. That's the key range low here. Big time key range low. We've talked about 72 in general. This market has stayed mostly between 72 and 80, maybe 72 and 82 if you want to go a little higher there. If it were to fail at 72, though, it starts to open up 68 and perhaps even the 64 level down below. So keep an eye on 72 here. If bulls can keep 72 bid, there could be another bounce back towards 76.55 in the near term. Looking at gold futures, gold is about break even right now. Down just 0.7%. This one has developed a narrow range at these highs, pretty compressed as well on a 2-week basis. Compressed at these highs, still an upward trend overall. We have another higher value relationship developed here for the month. Now, any pullback into this zone could be another buying opportunity as this market continues to stretch to the upside. 2,600 and 2,680 could be the next upside targets for gold. A failure here at 2480 and you start to open up a little bit lower into 2400. But right now, higher value relationship developed with the pivot range. Still an uptrending market overall. Any pullback again toward about 2480 to 2490 could provide a buying opportunity for 2600 and perhaps even higher into 2680 up ahead. Looking at the YM. The YM right now down about 0.5% at the moment. This one is seeing a little bit of a reaction at kind of double top highs here. That's your previous high. This is your high right now. This thing had a significant bounce back after that huge selling pressure that occurred after the FOMC key level from July 31st. Our next one again is going to be September 18th. We'll get a new FOMC key level there. But again, if this thing were to see reaction or rejection at 41.6, 41.7 here, we're looking at a return that could take us back to the midpoint of the previous month's range. That's 40,112. 40,112 right there. A super wide range right here for the previous month. And when you have a super wide range of price action, you have a wide pivot range, that tends to suggest compression ahead. And with compression, usually you see a pullback and then some bounce and compression that can happen. So if there's a strong reaction at this edge, we could be looking at a pullback toward 40,112 to begin the month. All right, looking at Bitcoin. Right now, Bitcoin up about 1%, but again, this thing has had trouble going higher lately. It wouldn't be surprising if we saw a flush first before we see a rotation back within the range. We're still developing a very nice wide range here between 56K up to about 74K, big time range. 65 has been a nice little midterm zone right here. Above 65 opens up 72 to 74. You can see right now this thing's trying to hold the previous month's midpoint right now, which is about 58K. A failure here, and you could be looking at a flash retest back toward 50K down below. So this thing is still stuck in the mud for the most part, stuck in the lower distribution of this larger range. Really needs above 65K to open things up. And sometimes when you're sitting on this edge for too long here, you see bulls start to long liquidate, and that's what tends to lead to another flash move downward. Any flash move like that could be defended for another rotation back up. Looking at Ethereum. Right now, Ethereum looking very similar as well. Very heavy. You can see it's pulled back here into about 2,400. And again, this market right now not really showing a lot of signs of big time strength. We've continued to see resistance at 2800. I've mentioned for several weeks now it needs above 2800 in order to open things back up to 34 and 4000. And shy of that 2800, you're going to continue to remain stuck between 22 and 28. As of right now, we're kind of still stuck in the range. Perhaps another flash drop needs to happen in order for responsive bulls to come in off the sidelines. So right now, looking very heavy still for the crypto market. All right, that is it for now. We'll see how this develops here heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.